Hello and welcome back. Before we dive in, if you're not in our public Telegram, you're missing out on daily pre-market outlooks, trade ideas, and real-time insights. The link's in the description. Join now and stay ahead of the market every single day. Now let's get into weekly outlook for May 26th to May 30th, 2025. We're breaking down the economic calendar and highlighting the best days to trade. Kicking things off with Monday, nothing major here, no high-impact news, no red folders, just a quiet start to the week. That means we will likely see sideways price action and lower volume. So if you're trading Monday, lean on your technical setups, keep it light, and don't force anything. Tuesday's no different, still no red folder events. The market could stay slow and choppy. Perfect time to zoom out, manage open positions, or prep for midweek setups. Patience is key early in the week. Don't burn out your mental capital. Wednesday, midweek, we got the FOMC meeting minutes at 2 p.m. Eastern. Now, historically, this doesn't shake the market too much, unless the Fed drops something unexpected. So keep it on your radar, but don't expect massive moves. If anything, the real opportunities are shaping up later in the week. Here's where the real action starts. Thursday is looking solid for trading. At 8:30 a.m. Eastern, we've got U.S. preliminary GDP, unemployment claims. These are market-moving reports, and if we get surprises, expect sharp moves, especially on USD pairs. Set your alerts, prep your charts. Thursday could deliver clean volatility and momentum setups. Friday, we got another red folder at 8:30. That one could definitely move USD pairs, particularly if inflation shows any unexpected strength or weakness. Now that we've covered the fundamentals, let's hop onto the charts and see what price action is telling us. So first of all, we got the DXY monthly chart here. So over here, you can clearly see the power of 3 on a higher time frame. AMD, accumulation, manipulation, and distribution. Price was in a range for almost 2 years. Up, down, and then manipulated to the upside, taking buy stops, resting above those old highs, tapping into a premium monthly order block, and then distributed to the downside with a massive move. As we have been anticipating perfectly in our Telegram at the start of the current month, we were expecting price to move higher to form the high of the month. And you can see price tapped into this monthly inverse fair value gap and dropped down. So our first draw on liquidity for next week is the previous month's low, as low-hanging fruit. And if price continues to the downside, our next draw is going to be this swing low. Now let's drop down to the weekly and see what it's telling us. So over here, price action is looking cleanly bearish. And here we were expecting higher prices for the last 3 weeks. Why? Because of this weekly CRT. And here's a pro tip for you guys. If you see any CRT on any time frame against the trend, you should only target the 50% level of the range. And here you can clearly see price touching the 50% of CRT and tapping into the inverse fair value gap, which was in premium, and then dropped down suddenly. So far for next week, our draw is the previous month's low, and if it continues lower, the next target is this line, the monthly swing low. So next, we have the EURUSD monthly chart, and price has been extremely bullish for the last 3 to 4 months. Since the euro is inversely correlated with DXY, it has also done the same, accumulated, then manipulated to the downside, rated those all sell stops that were present below these low, and after tapping into the monthly fair value gap, it distributed to the upside and made a market structure shift toward the upside. So these 3 consecutive down close candles are acting as an order block, and the current monthly candle tapped into this order block after the opening and gave an upside rejection. So from the monthly view, the next draw on liquidity is the previous month's high, and just like DXY, if it continues higher, then the next draw is this line. Now let's switch to the weekly time frame and see what it looks like. So over here on the weekly, EURUSD has been pretty bullish for a couple of weeks. After the monthly open, price made the low of the month inside a weekly inverse fair value gap, which aligns with the monthly order block. And here we also have a weekly fair value gap that's acting as internal range liquidity. And if we look closely, price gave a pretty nice rejection from here. So our next target for the coming week is this external range liquidity, which is the previous month's high. So let's see what price does next week. We will wait for Monday to print, and then we will look for buy opportunities. On the 4-hour chart, we got a clean market maker buy model, starting with the original consolidation, then distribution phase 1 and distribution phase 2. After hitting the weekly internal range liquidity, price showed a nice displacement to the upside, then retraced back into a discounted fair value gap and continued higher. So we're already on the buy side of the curve, and you can see price breaking through the highs and respecting the bullish PD arrays. So I'm expecting higher prices for next week to take out these buy stops. Alright, next we have gold weekly chart, and gold is pretty bullish, respecting the bullish PD arrays. And again, I'm expecting a move to all-time highs. Price tapped into a weekly fair value gap that's acting as internal range liquidity, and the draw for next week is this swing high, and the next is all-time high, which is external range liquidity. Let's switch to the daily chart and see how it looks. So on the daily, after taking those sell stops and tapping into the weekly internal range liquidity, price showed upside displacement and respecting the bullish PD array. Currently, price closed above this down close candle, so that will act as a bullish order block and support price moving higher. Now let's hop onto the 4-hour chart. On the 4-hour, we got a clean market maker buy model, starting with the original consolidation, then distribution phase 1 and phase 2. And as you can see on the screen, I anticipated this move in my public telegram, and price is moving toward its target. So we are already on the buy side of the curve, and price is continuously breaking the highs and rejecting the lows. So I'm expecting higher prices for next week from that 4-hour order block. So next, we have NASDAQ monthly chart here. As you can see, price is overall in a bullish trend, and it did a turtle soup of this low and showed a strong rejection, and formed the monthly CRT, as the opposing end of the CRT has been rated, but I'm still expecting higher prices toward this old high. Now let's drop down to the weekly to get a clear picture. So we are on the weekly time frame, and after taking out this old low, price closed above these candles, making them a high probability order block, and then it tapped in and expanded higher. So now we got a new fresh PD array, which is this bullish fair value gap. Here I'm seeing two scenarios. Either price expands from this bullish fair value gap, or it retraces a bit more toward this weekly order block. So overall, I'm expecting higher prices for next week. And that wraps up our full weekly outlook for May 26th to May 30th. We have broken down the fundamentals, mapped out the technicals, and identified high probability levels across DXY, EURUSD, gold, and NASDAQ. Now it's your move. Prepare your charts, set your alerts, and stay disciplined. If you got value from this video, don't forget to like, subscribe, and turn on the bell so you never miss a market update. And remember, our public telegram is completely free and packed with real-time insights, trade breakdowns, and pre-market plans to keep you sharp throughout the week. Links in the description. Join now and level up your trading. Thanks for watching, and I'll see you in the next one. Until then, trade smart, stay patient, and always manage your risk.